It's 2:17 a.m., and the house is silent except for the hum of the refrigerator and the soft buzz of your phone lighting up the dark. You're not awake because of noise. You're awake because your mind decided to replay numbers instead of dreams. The mortgage payment is due in a week. You can afford it, technically, the money is there, but your brain keeps calculating anyway. What if the bonus doesn't come this year? What if the company restructures? What if the unexpected repair hits at the wrong time? You roll over, stare at the ceiling, and realize the house you once prayed for is now the reason you can't sleep. That's the conversation nobody likes to have in 2026, mortgage payments versus mental health. When you first signed the papers, it felt like victory. Years of saving, searching, bidding, hoping. The keys in your hand symbolized stability. You weren't throwing money away anymore. You were building equity. You were stepping into adulthood with authority. Friends congratulated you, family felt proud, social media approved. The narrative was clear. This is progress. And financially, it might have been. But emotionally, the story is more layered. A mortgage is not just a payment. It's a long-term commitment tied to your income, your job, your health, your relationships. It's a fixed obligation in a world that feels increasingly variable. The bigger the payment relative to your income, the less room there is for uncertainty, and uncertainty is the one thing modern economies produce consistently. Companies pivot, industries shift, technology replaces roles. The payment remains. Psychologically, fixed high expenses create a subtle state of vigilance. You may not call it stress, you may call it responsibility, but your nervous system doesn't differentiate. When a large portion of your monthly income is pre-allocated, your margin for error shrinks. Margin is more than financial space. It's emotional space. It's the ability to say no to a toxic job, to take a sabbatical, to experiment with a new idea without panic whispering in the background. When the mortgage dominates your cash flow, experimentation feels reckless. Stability becomes sacred. Zoom out and you'll see why this tension is intensifying in 2026. Home prices rose dramatically in previous years. Interest rates fluctuated, changing affordability almost overnight. Property taxes adjust upward as values increase. Insurance costs respond to climate risks and regional pressures. The monthly number on paper is only part of the story. Maintenance, repairs, upgrades, furnishings, they compound quietly. So even households earning strong incomes can feel stretched, not broke, but tight. And tightness over time becomes tension. There's also the identity layer. Owning a home is still marketed as success. If you struggle emotionally under the weight of it, you might feel ungrateful. After all, this is what you wanted. This is what society told you to want. So instead of questioning the structure, you question yourself. Why am I stressed if this is supposed to be security? That internal conflict deepens the pressure. The deeper financial concept here isn't about whether mortgages are good or bad. They can be powerful wealth-building tools. Leverage, when used wisely, accelerates equity growth. But leverage also amplifies risk, and risk has a psychological cost. A mortgage magnifies both appreciation and anxiety. The higher the leverage relative to your income, the stronger the emotional swings tied to economic news, job rumors, market shifts. Think about how behavior changes under heavy obligation. You might stay longer in a job you dislike because the payment requires consistency. You might delay starting a business because irregular income feels dangerous. You might avoid relocating for opportunity because selling and rebuying seems overwhelming. The house that symbolized freedom can quietly reduce flexibility, and flexibility is closely tied to mental well-being. Humans feel better when they perceive options. But here's where the realization sharpens. The issue isn't homeownership itself, it's alignment. When your mortgage fits comfortably within your financial ecosystem, it feels grounding. When it sits at the edge of your capacity, it feels like a monthly performance review you can't fail. The same asset can either stabilize your mind or strain it, depending on margin. Margin determines whether you experience ownership as empowerment or as pressure. There's something almost philosophical about this. We chase stability through material commitments, believing they will quiet uncertainty. Yet, if the commitment is too heavy, it introduces a new form of uncertainty, the fear of losing what you just gained. True security isn't just having assets, it's having assets that don't demand constant psychological sacrifice. In 2026, conversations about money often focus on rates, prices, returns. Rarely do we discuss cortisol levels, sleep quality, relationship tension linked to financial strain. Yet those are real costs. A beautiful home doesn't automatically translate to peace. Peace comes from sustainability, from knowing that even if life shifts, you have room to adapt. The powerful perspective shift is this: wealth is not measured solely by net worth, it's measured by how much of your mind your money consumes. If your mortgage requires so much mental bandwidth that it limits creativity, joy, or risk-taking, then the cost extends beyond dollars. On the other hand, if your housing expense leaves you room to breathe, to pivot, to live without constant calculation, then ownership becomes a platform rather than a prison. So the real question isn't whether buying a home is smart, it's whether the structure of the payment supports your mental resilience. In a world where unpredictability is normal, designing your finances with emotional durability in mind may be the most practical move of all. Because at the end of the day, the goal was never just to own property, it was to build a life that feels stable from the inside out. And sometimes the strongest foundation isn't the one with the biggest square footage, it's the one that lets you sleep through the night.